If you look at the Fed, I know you're expecting a 25 basis point hike. What could, I mean, at this point, you don't think anything could derail it, but what's the thinking on 50 or 0?
Yeah, I think it's 25. I just think that I think it's, you never want to be definite to these decisions, but in my mind, there's almost no doubt there. It's going to have to be 25. 50 would just show a tone-deaf mood. 0 makes no sense given the data. So 25 is a lot. That is not to say there's a lot of uncertainty going to this meeting, because it's not really about what they hike. It's also about the dot plots, about the growth forecast, and perhaps most importantly of all, it's how Powell communicates around the turmoil of the recent week. How does he convey confidence in the financial system without kind of sounding like he doesn't know what's going on or sounding like excess complacency? So that's a very delicate line for him to walk. I think he's got a lot of experience now. I think Powell will probably, if I had to bet on it, will do a job that will reassure markets that he's not complacent and yet they're still hawkish. I think that'll deliver a message that maybe will take a while to process, but by next week, I think we'll see yields higher, and I don't think we'll see stocks panicking as a result of it.
Yeah, and I tend to agree with you, Mark. So, hike 50 basis points and markets would panic. If you don't hike at all, it means probably they don't have that much faith in their financial system. Is there, when you look at the banks, we're trying to figure out, of course, what financial conditions due to already tightening that would have done because of the financial crisis, but also credit crunch looming.
Yeah, look. There is a looming credit crunch. There is a severe tightening of financial conditions that's happened from the banking crisis. We're going towards a recession in the US. I mean, the idea of a soft landing was always a myth. It was always a bonkers idea. You don't end an inflation problem with a soft landing. You end it by curbing aggregate demand. That's what basic economics teaches you, and that's what economic history teaches you. The only way we avoid a hard landing is because we don't control the inflation problem. So we can avoid a recession this year by not controlling inflation. If we're going to control inflation, we're going to get a hard landing. My bet is that the Fed will stay focused on inflation and therefore bring on the recession they need to bring on to control inflation. There's a chance that they get bullied by the market. They step off the gas in terms of the fighting inflation. They pull back on rate hikes. We pause the rest of the year, and we just create a much bigger inflationary problem for the future. I really hope that's not the case.
The turbulence in Fed expectations since FOMC met actually last February has been nothing short of stunning. Mark, what does it tell you about the market sentiment out there?
Well, I think one takeaway is that the moves of the past 2 weeks have been so extraordinary, from above 5% down to almost 3.6%, and then back up as we are now about 4.16%, is just an incredible set of moves in the space of about 9 or 10 sessions. The average move over that period has been 43 basis points. This scale of volatility has cleaned out so many positions. So one of my biggest takeaways is that a lot of books are quite clean. Speculative books are quite clean going into this meeting, which means that ultimately I think that markets can take on a whole new narrative for the next couple of months. And that's quite a refreshing thing to take. So we're going into this meeting with a lot of uncertainty, but we can come out of it with a very clear narrative because we won't be stained by pre-positioning.
There you go, crystal clear. 3 minutes of TV gold. Mark, thank you. Remember, you can get up-to-date analysis and insight from Mark and the rest of the team. Just go to MLIV, MLive, go on your Bloomberg terminal.